we're going to be taking a look at SDS. It's an ultra short S&P 500. As a matter of fact, we're going to be taking a look at a lot of them. We're going to take a look at where we're making multi-weekly lows, because we are. Bear funds back in 2009, they really used to be up here. However, as we move in 2012, like any imbalances that we look for between bear and bull, is that we constantly get over here and we look at this side of the market. That's just the SDS. I'm going to go through another one relative to the QID. And in this QID, you're going to see a multi-weekly, yearly weekly lows. And we're finally down here. At times they have rallies and you can make good money trading them. When the markets are in corrections, it's great to have some of these. MMTs are being trained on how to use them and trade them. We just hit on the ultra short QQQ, the QID, we just hit those lows. So naturally we're going to be looking on that side of the market. Here's that financial bear, believe it or not, making multi-weekly lows again. But then again, at times, these things have great trades. And this is that FAZ. But you have to know how to trade it. We like them down here at weekly lows because the bull has got to be awfully high. Lately, we've pulled back here, and we're going to be watching that FAZ. Another one we're going to watch is the SKF. Why MMTs? Because, once again, they do have great rallies. They can even be sold short down. Remember, you're at multi-weekly lows of 2011. This was that weekly reversal, got up here. $76, it's down. That's the SKF. Don't forget it. Large cap. Large cap is at multi-weekly lows, but they're tradable. They're buyable like it was over here. We bought and sold these several times on our, we got all the live trades on our website, not after the fact. Keep your eye on the BGZ moving forward in calendar 2012. We're looking at the imbalances between bear and bull moving into 2012. Here's that China FXP at multi-yearly lows. They have great rallies at times when markets are doing what they're doing, when they have corrections. You made a top up here on a weekly. All eyes are on this double weekly bottoms here and these China 25 ultra short FXP. Not to mention the here is a EDZ weekly lows, tradable at various times, and consolidating multi-weekly lows, a triple, quadruple weekly lows in here, but we're going to be watching that bear 3X EDZ. Another one that we like, that we'll have a focus on. A little bit, some of the ones with a little bit higher volume, we will be taking a look at the DXD. DXD, ultra short DW30. Look at here. Once again, we're at multi-yearly weekly lows in the bear. It's nice to know what direction they're going into because that means your bulls are doing well. And these are all tradable at certain times. When markets are having corrections, bears go up. We can see where there's going to be a lot of that going on. And we just want people to be very mindful of this one. Ultra short Russell 2000 at its all-time lows. Why is this? I can tell you why. At times they're great trades, man. When markets correct, we've done these. These are the weekly breakouts. Here's that weekly top reversal off of 50 down to 38. TWM, ultra short, Russell 2000 right here. Don't forget that. Don't forget this one either. Right here. It's a SJH, ultra short 2000. We can see how going into calendar 2012 that the bull is much more inflated going into the new year and the bear is very deflated. And when we have market corrections, these are great rallies up here. Don't take your name off of that SJS. Don't. It's pulled back during the holidays. The bear is going in to the new 2012 bull calendar oversold. That's why we're bringing them up like we always do. We've got the great track record on these things when they work. Everything has a cycle. You can short them down too. It doesn't matter. We're at multi-weekly lows there too. Let that be known. Another thing is we'll be looking at technology. Here's an REW. That REW short, you can see it's got a little bit of range. It's got quite good ones on this weekly level. Here, I'll blow up the chart. Don't take your eyes off of it. There's the 2010 11 highs right here. When the markets were selling off, we had a 4-week breakout. They're great trades, and then they're great shorts. They rolled over, but nonetheless, they're not breaking that. They're not breaking that trend line. And REW, REW, REW. We've done the EUM. SH. It's another way to take advantage when the S&P 500 goes into its correction modes as it is today. You can see that this SH, it's a short S&P. That's the symbol, SH. Let's take a look here. When the S&P was selling off, these are great ways of positioning oneself for the actual, when everyone is getting clobbered, these go up in value, you're making money. And the thing about it is, we always look at where that bear and bull rating is. But when markets correct, it's better to be on the right side of the print than not be on the right side of the print. And this is why we cover these bears, and we cover them well. We cover them well. SKK, ultra short 2000. I already covered it. So those are the ones that we're going to cover for now. We'll be covering others that are very important. Some of the small cap ones, and you know, some of the like this one here, maybe we'll look at from time to time. Doesn't have much volume, doesn't do much, but what's good to know about it is that it's an MSCI. It's EFU ultra short. Doesn't have a lot of range to it, but it's got enough to make money at times. And when the markets are selling off in turmoil and things are going that way, you should be always cashing in the other side and going with the side that's working. And this is just how this business is. Okay? The MZZ, this is a MD 400, ultra short, mid cap 400. They too, when mid cap sell off, they got great ranges here. Don't think they pay. So when we do have these market corrections, of course you want to be on the right side of the market. You don't want to buy stuff on the bull side and hold it all the way down. No, you cash in the bull at the high and you start accumulating when markets are selling off. This is where you go. Look at that range, 60 down to 38. What is it? MZZ. That's a good one, that MZZ. And so is the MYY. Why is it? MYYY. It's a, you know, mid cap 400. Again, they've got trades that are available that people can get off of that bull side and get on that bear trends for a while Does it mean that you buy and you hold them for 30 years? No one's saying that. This is a business, and the trends are what they are, and we're coming down. We're not back here at these lows, but we got some support there. We'll keep our eyes on them moving forward. Okay? And the thing about it is, the small cap bear, here's that small cap bear, TZA, that people love. Like I said, it's got great ranges, man. And let me tell you about that small cap bear. Small cap lead rallies in December, and the great December Christmas period that we have just going through and into the new year. And then large cap usually rallies thereafter. We think that the bear looks attractive during the first half of the year of 2012, and different pieces of that 6-month period is, look at, there's going to be some liquidations, there's going to be some markdowns in equities, there's still that turmoil that's going on out there. Earnings are going to come in a little bit lighter in the upcoming January 2012 quarter. The quarter after that, we're going to find out where destabilization is. That would mean that you can't stay in balance between the bear and the bull forever, and there are some headwind troubles around the corner that we have talked about for a number of years and number of months here, and we call the tops. We call them, hey, it's time to get out of those bears. That's the top. Get out of it. But they were buyable from here. They were buyable at $30 to sell at $60. 100% gain on a home run using that TZA ETF Bear Funds 2012 oversold.